17. All right. Just doing a breakdown or refresher as it pertains to the euro, right? As always, guys, as intraday traders, right, we have to trade with what the daily bias is, right? So in this case, the daily bias is that price or the ultimate draw on liquidity is previous day's lows. So there's really no reason to try and trade against that, right? I do understand that at times there will be, counter trend liquidity sweeps, but if the bulk of the volume is bearish, then how many times have we saw where those bullish expansions are, just false moves, and then price comes back and we're either taken out or we're stuck with the break even, right? So, and I'm not saying we can't trade counter trend, but just be mindful that your main premises should be on what the ultimate draw on liquidity is, and we can see it with the euro right now. Everything has been attacking previous day's low, right? Previous day's low attack, previous day's low, previous day's low, and then even today, right? We've just swept, just barely previous day's low. So I'll take you guys back to Monday, right? Monday's price action. Coming into the week, we should have been expecting, right, this week to take out previous week's low, because if we look at the previous week's price has been taking out previous week's low, right? So this was previous week's low here, and this level here is previous day's New York low, right? I'm talking about Monday. So as we're coming into Monday, right? So eventually we're going to get into advanced market structure, and that is a completely new way, not new, but a more refined and objective way of looking at market structure. It has to do with long-term lows, intermediate-term lows, and short-term lows, right? In this particular case here, this low, which happens to be the New York low, this low is an intermediate-term low, right? As you can see, here's a short-term low, long-term, and then it's intermediate-term low. So an intermediate-term low is defined by a price swing that rebalances a range, right? So here's a range high, range low, range high, and then that range is rebalanced by this swing right here. So this is that intermediate term low, and then what rests on both sides of an intermediate term low is short term lows, right? Short term low, short term low. Now, if that intermediate term low is taken, then in this case, right, here's what I'm talking about. Here's a sweep, here's a break of structure, right? And we at this point, we would think that price may be reversing, and that's why we have to get away from trying to pick tops and bottoms. Let's just stay with the where the bulk of the order flow is coming from, and let's trade in that direction, right? Because there will be times where price will we're able to take counter trend trades, which I'm going to get to in a second. But in this case, once this intermediate term low is swept, then basically that nullifies all assumptions that price is going to want to expand higher. So beginning of the week, if you guys remember, I was expecting previous week's low to be ran, but I did not think price would go straight to it. I thought we would get more of a accumulation, manipulation, and then some type of distribution at the week's low. But we didn't get that, and so we must respond to price accordingly. Now, here is that New York low, which happens to be intermediate term low. Once that is broken, all buy opportunities are null and void. Once again, an intermediate term low is defined by a swing point that completely rebalances the range, right? And so that basically what that means is that price should not break that low until premium objectives, in this case, premium objectives are met. Once that low is broken, it nullifies all buying opportunities, or buying assumptions rather. And now we're back into phase with our shorts. So as you guys can see here, as we get into New York session, price comes up and we get our main pattern here, down, up, and then we expand lower, right? The key to this is that price is basically using previous sessions New York low as a level of support and resistance, in this case resistance. All right, now the biggest thing, what I want all of you guys to begin to focus on, and just want to continue to shed light on this, the fair value gap is the most important thing to this whole puzzle. If you go back and look at price is only, right, once the overall narrative is created, all price is doing is trading back into the fair value gaps. In this case, we trade into this fair value gap. If we come to a 5-minute chart, then you can see this here, this breaker. This would be our breaker, this entire area here. And we also have another breaker right here. And I know some of you are probably asking, well, how do I know that price is going to move from this breaker and not this breaker? We don't know, right? All we know is that this high here is buy side liquidity, and the only way that we can decipher, right, in future cases where there's an area of two breakers and a huge fair value gap, what we do is measure that range, right? Because everything is dependent upon a dealing range. Measure that range, and in this case, this breaker is in the premium portion of the range, and also this breaker. So in this case, I wouldn't even waste time trying to get the most precise entry, right? We should be advanced enough now to where we understand where price is headed. So here, I would place stops here. Here's what you can do with this. You can place the stop above the candle that created the imbalance, or you can just say, I want to be safe and go over the entire swing point. This is just a matter of 2 pips, so however you guys choose to manage that, it is on you. And then in terms of targets, right, first target should be here at this low, right? And I want you guys to pay attention to these projections, negative 27, negative 62, and then this negative 1 is what we call a measured move. So 27, what you do with these extensions is you marry them up with certain liquidity pools. This 62 is actually 50% of the weekly fair value gap, I believe. It's either 62 or 1. But I believe we'll see price push to both of those levels. Now, in terms of trading counter trend, right, see 62. That's where price pushes to. In terms of trading counter trend, right, we've just swept a previous week's low. Okay. All right. We've just swept previous week's low, and we just had a market structural shift. And not only did we have a market structural shift, what did we leave behind? Fair value gap. See that? Let's come down to, actually I don't even think we have to move to a lower time frame, but we will. Let's see how price plays out. And there we go. Alright. Buy side liquidity resting under those lows. Price pushes into the fair value gap. If you didn't understand why I bought, this is why. And what I'm targeting is this here. Right, remember, this area here swept the highs from that, and we got an expansion lower. This is balanced. This is not balanced. This is buy side liquidity. So I'm only targeting this, and then I'm looking to go short from there, right? So once price pushes there, we sweep it. Now in the lower time frame, let's see if we can find reason for entering short. All right, price plays around. This would be this low to this high, right? This is the range. This is the dealing range. All right, that dealing range is violated here. And then price trades back into an old area of imbalance. But keep in mind that this here is a breaker, right? Down, up, sweeps this buy side liquidity here, rebalances this. Everything above here is balanced, right? This dealing range was violated. Price closed up under it, and we're just sweeping buy side liquidity. So what you could do is, I would honestly just take entries from anywhere in here, and stops would be above here. And then there we go. Right, and then what are we targeting? Right, we should be targeting this intraday low right here. So we're targeting that intraday low, and this is all in 1 day, guys. 30 pip stop, 7 pip game, so that's a 1 to 5. This move here is a 1 to 2, and then this move here is a 1 to 6 maybe. Can't do math. But we see price expand. I believe the Asia session created a consolidation, and then we saw price get away once again. And guys, even if you look here, right, this is at the end of this day. The imbalances, right? The most important thing. Let's go to the 3 minute. So here is price expanding lower. Here is an imbalance. Price taps inside of that imbalance. So now this is the dealing range here. This low to this high. Boom, 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 right? Now, that high swept, price pushes down, pushes up. This is a failed price swing. Why? Because price swept liquidity, right? Or it broke structure, sweep, push down, and this was not enough to allow price to expand beyond this level, right? And then we get this push here. Now, once that happens, you can either be a trader at each point of failure, or you can say, I'll wait until the imbalance is filled completely, right? And you can see how this pushes into the imbalance. But what is not, in this range here, what is not provided before this trade? There's no buy side liquidity. So price engineers the buy side liquidity here, and then it sweeps it. And what you could also pay attention to is this. That's the push up, that's a push down, that's another push up, right? So this area here becomes what? Our breaker. This is a breaker. price pushes into the breaker and the order block, right? This series of up close candles for the down move, that's an order block. So you could also be a trader from there. And then in terms of projections, what you could do is measure this move. See how the first reaction comes from 27, and then I believe price should push to 62. Yeah. All right, so we almost get a full measured move. I think we do get a full measured move. Yeah, right there. Okay. Now let's look at the trading done on yesterday, right? So you see how we get a full measure move here right at 100, right? This is algorithmic, guys. And so in terms of targets, target projection, you just take the most recent dealing range, and you have 27 extension, 62, and then the 100 is a full move. Now, in this case, here's a scenario where the daily bias is that price is drawing on previous day's low. Well, in Asia, we've already taken previous day's low, right? So for me, what that leaves is, for in terms of time, right, that price is only, for throughout the rest of the day, price should seek premium side objectives. Okay. So I didn't catch this trade in London because, of course, you guys know I'm not necessarily trading London. But if I were, then this would have been a wonderful trade, right? Price sweeps, sweeps, sweeps. Understand we're inside of an imbalance. Here's that market structural shift. We come down to a lower time frame. Here's the imbalance. And here. And if you're thinking that there's no buy side, sell side liquidity in here, you just have to come to a lower time frame and understand that sell side is created under that low, right? They're just giving 3 drives before expanding back up, right? And here's another imbalance that's created, and then we push away, right? We come to a 4 hour. Let's go to a 1 hour, actually. If we come to this is the 4 hour, hang on. I was trying to show you guys basically okay, here it is here. Alright. Here's an order block, or here's an order block. And then here's price pushing inside of that, feeling this imbalance. So here's price pushing inside of it. Institutional swing low, 1, 2, and 3. And basically, if you understand that price is responding to an order block that was created prior to a strong expansion to give a market structural shift, then when the imbalance is created in here, in this area, when that fair value gap is created, then you're safe to take buys. See, here's an order block series of down close candles, and then you're safe to take buys in here. Now, what I was banking on, waking up and coming to the New York session on yesterday, I was actually banking on this here. I was banking on price reaching back into this 1 hour order block. But then once I saw price pause, once I saw price pause, I kind of saw that build up, and I thought that they would run that low and tap into this imbalance here. See, I thought they would run and tap into this, so my orders never got filled. And then once we come to last night, I take note of this small imbalance here. And just hang on, because we're going to get back to talking about intermediate term lows. Okay? So once that move is made, price comes back down, and I could have kept my original limits here, because I had limits in this area, but I don't like to trade Asia, so I canceled them out. But let me stop and say this. All right, I almost got tricked up into saying, okay, price is, from an hourly perspective. I almost got tricked up, and let me clear the chart up. It's kind of messy. I was almost tricked up into saying, okay, price has broken this 1 hour structure. And this is where we all have to be careful, right? Because the bulk, right, or the elephant in the room is, taking sell side liquidity in terms of daily lows, right? So instead of getting tripped up and saying, all right, cool, price is going to expand higher, now we're going bullish, right? Because that would be considered picking tops and bottoms. I'm sticking with the idea that price is attacking previous day's low, right? So here's my previous day's low. And now let me figure out, how does price get to that previous day's low? Well, depending on where the Asia range is by the time we get to the London Open, then, we could possibly sweep this area here, fill in this imbalance. Feeling this imbalance, and then this is an intermediate term low because it completely balanced this initial range. So price should not move lower than this until premium objectives are met. In this case, the premium objective is these equal highs right here. So, and this is also an order block, so you can see London Open happens, price pushes into it, and then we seek this area here. See that? And we also have taken that previous day's low. All right. So even now, with what price has done, what we have to keep in mind is that price is still bearish, right? Here's the previous day's low now. That's what I'm looking to, that's what I'm looking for price to be chasing. We just filled in that imbalance. Who knows, it's possible we could come to this one tomorrow, because, if we had to build a narrative, we would say that this, these relatively equal highs or this low resistance liquidity rests right below an imbalance, so that would make sense for price to take that high and then expand lower tomorrow. And then what we have to keep in mind is that this is an order block, right? And an order block is not the last up close candle before a down move or the last down close candle before an up move. An order block is a series of candles, right? A series of candles followed by a reversal in price that has an imbalance. So what I would expect out of tomorrow is for price to possibly push here, and then we would attack previous day's low again. I don't foresee anything other than that happening. I do understand that we have 4 hour structure has broken, but I'm not losing sight of the idea that price is attacking previous day's lows. I don't want to trade against that just yet. And then if we look at this range, you know, price seems to me that price has only wanted to push to premiums of the range. Right, here's 70%, and then going back to the DXY. DXY is not slowing down until it reaches this level here. You know, I don't see it stopping until it reaches here. Right now, it's pulling back into this daily order block to a series of down close candles before an expansion higher. Right, there's a slight imbalance right here, and then we're just seeing price reaching to that daily order block to expand higher. So that's why I'm expecting the euro to then expand lower, right? Because the euro is only reaching into this this order block here, right? Which we know now is a series of 3 or 4 hour candles. That's all I have, guys, for today. If anything else follows, I'll be sure to update.